Welcome to Khanversations. I'm Muqtedar, your host, and today I'm going to talk to you about the emergency cabinet meeting that Prime Minister Modi held on Friday in the afternoon at 1 p.m. to discuss the economic impact of Donald Trump's 50% tariffs on India, as to how it's going to affect India's GDP growth. The estimates are that it's going to reduce India's exports to the US by 25 to 35 billion dollars. And you can imagine how many businesses are going to be affected negatively, how many jobs will be lost. We don't have a full estimate of that, but it is definitely going to reduce apparently exports to the US by 25 to 35 billion dollars. And there are no alternative markets at the moment immediately for diversification to be able to sustain the same level of exports. But the more worrying estimate is that India's growth rate will decline by at least 0.3% or even as high as 0.5%. So it is quite possible that India's growth rate, which is now projected at 6.2%, may either go down to 6% or may even go down to 5.9%. So if it goes down to 5.9%, there will be a very, shall we say, a symbolic negative impact also on the morale of the business people and perhaps even the sentiment on the stock market. So far, the stock market has proven to be quite resilient because they feel that the pharmaceutical industry is not yet impacted by these tariffs, which they are exempted from. It is also being a bit more positive because India's iPhone exports, which are, I think, in the range of now $6 to $7 billion, are also not yet impacted by these tariffs because Donald Trump has exempted semiconductors and their derivatives. But nevertheless, I will summarize to you what the cabinet meeting basically theorized on how to deal with these tariffs. And after that, I'm going to show you a lot of data. So please watch this show, not just listen to it. Because if you're just listening and not seeing these huge data sheets that I have pulled from the Indian Ministry of Commerce, then you might miss some of the nuances of the argument. So I'm going to talk to you and show you how difficult it is to diversify immediately and what the fact that India is America's biggest export market has kind of given America a leverage that is going to be quite detrimental to the Indian economy in the short run. So I'll be showing you a lot of data from the Indian Commerce Ministry to make my point. But before we proceed, please subscribe to Khanversations, like this video, press the bell icon, and don't forget to share this video with your socio-political network. So what I'm going to do today is I'm going to show you what the India-US trade was like, and then I will show you what India BRICS trade looks like, especially with the main countries, even though the United Arab Emirates is India's probably the third biggest trading partner after the US and China, but I'm not including it here at the moment. But anyway, in the Prime Minister's meeting, what they decided to do was that they came up with four main strategies to counter this situation. And those four main strategies are: one, diversifying export markets to basically find new places to sell the same goods. So if the United States is not going to import India's electronic products, whichever they are, then they should be sent to other markets. That's where BRICS come in. Will Brazil buy some of this stuff? Can we sell some of this stuff in Russia? Can we export some of this to China? That is the question that is about diversification. But remember that as India looks to the global south and maybe even EU to diversify its exports, it's going to be competing with China, which is also on a massive export diversification strategy and has had at least 2 or 3 years head start in that category. China had the best export year last year, and in spite of decline in imports from Europe and North America, China had the best export year with nearly $1 trillion in trade surplus. And that came because of China's own diversification of exports. So India will be running head on against Chinese diversification. So that's one strategy. The second is they want to alter the export basket, which means they want to export other things that they haven't been exporting. And because they were so focused on the US, the kind of exports the export basket was more determined by the US market. So now that will be changed. The third strategy is to stimulate a domestic demand. That's easily said than done, to get people at home to buy more, which means either you have to give them tax exemptions so that they have more cash in their pockets to spend, or that prices go down at home. And people find that they have more disposable cash. I don't know how they're going to do this, but they want to stimulate domestic demand. And then also fast tracking ease of doing business reforms. I mean, this is what Donald Trump has been asking anyway. But these measures cannot be immediately implemented or even designed. So other than that, assuming that all of these strategies don't take place by tomorrow, what will be the impact? Can India really diversify? And that is what I want to show you through these charts. So this is data of US-India trade from 2021 fiscal year to 2024-25. Remember, India's fiscal year starts in April and goes all the way to March. It's not a calendar year. So this is the dates. As you can see from this is taken from the Government of India, Ministry of Commerce and Industry. So the number one is India's exports to USA. Number 6 rows is India's imports from USA. And number 16 is the trade balance. So if you look at India's exports to US, they have grown from 51 to 76 billion, then it's 78 billion, then 77 billion. And now the last year it was 86 billion, the best exports year that India has with regards to US, and including a massive jump of more than clearly 10% from the year the year before the previous year. So really a significant jump in exports to the US. If you look at imports, and they are row number 6, India was importing 28 billion, then 43, huge jump because of the end of COVID, then it jumped to 50, and then sudden drop to 42 and 45. So the US is exporting 45 billion to India. India is exporting 86. So the trade deficit for last year was $40 billion. And with the services, the difference is only $3 or $4 billion, I think. So this is basically goods and merchandise. So this is the point I'm trying to make. The US market is a market where India has the largest exports, 86. The next exports, I think, is much, much lower, and I will show you what that is. So keep this in mind. India exports to US is 86. India has actually a trade surplus of over $40 billion with. Now, this is going to be hit by a loss of $25 to $35 billion. So India's exports to the US, you could say, could drop to pre-2020, pre-COVID years, so to about $50 billion or maybe even below $50 billion. So where will those exports go? Where can we diversify? From the geopolitical orientation, you can see that Prime Minister Modi is reaching out to Brazil, reaching out to Russia, reaching out to China. So I wanted to ask this simple question. Are these countries going to absorb some of this trade, or will it have to be Africa or other ASEAN countries which China wants to dominate? So let's look at the trade with Russia. So the trade with Russia, the exports have jumped from $2 billion to now suddenly 4.8. So it has doubled, but it's just $4 billion of aid. So it's very clear that there is no Russian market. How much more can India sell to Russia? Can it go to $10 billion suddenly by next year? That's the question that remains. If you look at the imports, they have jumped from $5 billion to $63 billion. This is primarily because of crude oil imports, and it's gone up to actually 67 this year. So India is importing 63 billion and exporting only 4.8 billion to Russia. The trade balance is huge, 59 negative trade balance. So can India reduce this negative trade balance? Is Russia willing to buy more? What else does India have to Russia that it can sell? In fact, India is on the point of increasing its imports by trying to say, sell us more S-400s, sell us Su-57s, the fifth generation fighters. So I think the trade gap is going to likely to increase in Russia's favor rather than in India's favor. If you look at India's trade with Brazil, so it went from 4 billion to 6.7 billion in the past 5 years. It's a 50% growth, but it's just 6 billion. And then if you look at imports, they have gone from 3 to 5. So there is an increase in trade, but the total trade remains around $12 billion. That's it. It's not much at all with Brazil. It's BRICS partners, both countries in the global south, both developing. I'm surprised at how low this number is. And so the trade balance is in India's favor with about $1.3 billion. So they are talking of increasing trade. How much more can they increase? And then, of course, the giant is China. And if you look at India-China trade, India's exports to China in 2020-21 were $21 billion. And this is the more troubling and frightening data, actually. India's exports have declined from 21 to 14. So basically 33% decline in exports to China, 21 to 14. And India's imports from China has grown from 65 to $113 billion. So for a total of $127 billion of trade. So the India's imports from China have nearly doubled in the past 5 years, and India's exports to China have declined. So if you look at the trade imbalance, it's huge. It was 44 in 2020, and it's $100 billion now. Huge trade imbalance. So trading more with China, I don't know. Can China be the replacement to the US market? Unlikely. So if you look at this, I just prepared this small bar graph to give you an idea, which is the blue on the US is India's exports to the US. So all the blue are India's exports and all the red ones are India's imports. And you can see India is a huge importing country. It has a huge trade imbalance overall. India exports about $450 billion, imports over $750 billion. So there's a huge 200 plus billion. I can tell you the exact trade overall. India's trade imbalance is about $280 billion in the negative. So India's total exports are $280 billion less than India's total imports. So India is going to face a huge challenge by losing a large segment of its biggest market, which is the United States. So for those who are in the Indian media and in the Indian, shall we say, strategic thinking sphere, they are making a huge mistake if they think that a trade war with United States is somehow going to benefit India. In the long run, it might, because it could result in 2 or 3 things. One is helps or forces India to diversify and also forces India to reform at home domestically from the economic perspective, which are very critical and absolutely necessary. So in the long run, yes, being less dependent on the United States. As I was listening to one particular commentator, he was saying, this is a lesson that India should learn, not to put all its eggs in one basket and spread them around. So yes, eventually India will adapt and diversify its exports. But it's not going to be that easy, because Donald Trump's tariffs are not just going to impact India, they're impacting everybody. They're going to trigger inflation in some places. They're going to trigger unemployment in some places, because most countries' exports are going to also decline or profitability is going to decline. Look at Vietnam with 20% tariffs, the Philippines with 19%, Indonesia with 19%, Sri Lanka, Bangladesh, Pakistan. Everybody is now going to be adding. Plus, many of them have also opened their markets to U.S. exports. So the whole issue of trade balance is going to change globally. And it's quite possible that the United States, or very likely, not quite possible, it's very likely that inflation is going to hit the US and reduce the growth of the US economy. And if there's a reduction in the growth of US economy, in fact, if the US moves towards recession, God forbid, it's not good news for anybody, because if you rely on US consumption for your own growth, especially countries like Germany, Japan, to some extent India, especially with its services sector, etc. So if you are reliant on US consumption for your own growth, a recession in the United States is not going to be a good news. So I think that the meeting that was hosted by Prime Minister Modi must have been a very somber event, and unfortunately India now does not have the culture of press conferences, so obviously there was no press meeting afterwards, no questions asked of the Prime Minister, no questions answered as to where. So we don't know what the cabinet is really thinking, except from what was released to the press, that these are the 4 strategies that India is exploring. I'm going to summarize them again for you. They want to essentially diversify the markets, look at new markets to export. They're going to diversify the trade basket, find new things to sell abroad. They want to promote diversification, consumption at home, and they want to also have some kind of economic reforms. So these are the 4 strategies, but these are strategies which are very generic. I mean, this is what I would have recommended even 2 years ago, for India to do that with or without US tariffs. So this is I think this is going to be a watershed moment in India's economy, India's growth, and we will see how it goes. I think it is absolutely important for India to try and repair its relations with the US rather than to try and look for alternatives. The whole reason for me to show this bar graph is that if I was the Prime Minister right now, in the short run, I think a break from the United States will be very harmful to the Indian economy. I have always advocated that India maintain good relations with China, but India has swung so much towards the US and so much away from China geopolitically, that now that if India tries to swing towards China, China is going to hold a massive advantage over India, and there will be a cost. We don't know what that cost is going to be to befriend China and improve relations. It's not going to come for free. This idea that India is a prize to be won from the United States, that has been diminished. And so if India is going to win a more friendlier relations with China, that is the price. And that will come with a price. That is a prize, P-R-I-Z-E, and it will come with a price, P-R-I-C. So, but for now, this is all I have to share. So if you have not yet subscribed to Khanversations, please subscribe to the channel, like this video, press the bell icon, and don't forget to share this video with your socio-political network. Until next time, I'm your host, Muqtedar Khan. Take care. Bye.